Good afternoon, and thank you for coming along to the second last session. I know it gets a little long towards this point in the conference. I have two commodities to cover today, so I fairly have to skip along. And what I'm looking to do today is to present, first off, some of the economic factors that are common to both industries in this year's outlook, and then to follow that with a bit of detailed discussion on each fiber to draw attention to the supply side and where ABARES sees the industries going over the medium term. So first, I'll start with those common elements. On the demand side, weak economic growth in the EU and the USA, which started in the second half of 2011, affected consumer confidence and retail sales. In the EU, the fall in demand conditions was brought on by the European sovereign debt crisis, from which the region is still trying to recover. And the US economic recovery, while underway, is still struggling a bit as high unemployment keeps consumer spending at bay. Now, the outlook for growth in both those countries is pretty modest, between 2.4 and 2.5%. And the economic uncertainty that continues in the European countries will still add another layer of uncertainty to this year's wool forecast. Now, the impact of this is that as major markets for imported clothing, the demand for wool and for cotton products is expected to remain somewhat muted over the medium term. Now, turning to China, which is the principal export market for both fibers, economic growth is expected to be lower than it has been in the past couple of years, but to steady at about 8% through the projection period. However, the expectations for personal income growth in China will sustain retail demand, and that will support the demand for Australian fibers. And that's very important because China is a key market for our industries. And as for the exchange rate, although it is expected to depreciate slightly over the medium term, it is also expected to remain relatively high. And when you have a high exchange rate, it means that the cost of our products remains quite a bit higher than it used to be, and that will put downward pressure on prices over the medium term. So those are some of the common demand elements, and now let's turn to the supply side. We've had good seasonal conditions over the past couple of years, and that has, provided an ample supply of irrigation water for our cotton growers and excellent pasture growth for sheep growers. Production of wool is expected to increase through the medium term, and production of cotton, while it is expected to fall in the short term, it is expected to remain favorable when compared to the 5 years up to 2008-09. Stocks, given the expectations about production over the medium term, combined with that demand profile I just described, we expect stocks of both fibers to increase over the projection period. And when you put supply and demand together, it allows us to formulate some ideas about prices going over the next 5 years. And the price schedule for both fibers is basically the same. In the short term, we see prices falling considerably over where they are, well, this year for wool and last year for cotton, but to remain over the projection period relatively stable and on average certainly higher than they have been in the 5 years up to 2008-09. So in a nutshell, that's my entire presentation, because really the outlook is so common to both these fibers. But I'm now going to talk about some of the specifics relating to each industry, and I'll start with wool. Carter says this is not a wool chart, but this speaks to wool production. That's why I'm starting here. Now, this is a graph obviously for sheep meat prices and the size of the flock. And what I want to point out here is the steep increase in sheep meat prices starting at about 2008-09. And that came from strong demand from the Middle East, compounded by the drop in available supplies from Australia and even New Zealand. And it provided a strong impetus for growers to increase the size of the flock. Now, until 2 years ago, the national flock had been steadily decreasing for about 15 years and hit a low of about 68 million head. But now it's been steadily increasing over the past 2 years, and we expect that to continue, albeit at a decreasing rate out over the medium term. Now, the impetus for growth of the flock was further supported on the wool side when prices really started to take off about a year and a half ago, as I've depicted here. And the reason was the strong recovery from the global financial crisis in the EU and the USA. And so there was strong demand coming from that front, while at the same time there was a low global supply of wool by the principal apparel wool exporting countries like Argentina, Uruguay, New Zealand, and South Africa. However, with the new economic, I say new, but the new economic uncertainties that have started in the second half of 2011, prices for wool began to fall in July, and they have fallen about 15% since that time. Now, despite the decline, we don't expect prices to fall much more for the rest of the year because of the low stocks that Australia is thought to have at this time, at least the assessment by our analyst is such. And we expect prices to finish about 4% higher than where they were last year. So having said that about the short term, I'll just move now to the flock expansion and dig down a bit deeper in that regard. Up to the end of June 2011, the size of the flock increased to about 74.3 million head, and it's expected to increase another 6% by the end of this financial year. Now, the current growth, obviously, as I said before, reflects producers' expectations on the continuing strong prices for sheep meat, and it's been aided by favorable seasonal conditions over the past couple of years. Now, over the medium term, the flock expansion is expected to be achieved by increasing the number of wethers in the flock. And that is the dark blue section represented here in the components of the flock. And the reason is because of the great sell-off in wethers in the mid-2000s when the price of wool was very low. And so when we bring those wethers, the number of wethers up, what that's going to do is increase the average cut per head, and that will assist in the increase in wool production given the increasing size of the flock overall. Now, as to where the increase in the flock is happening, I looked to ABARES surveys analysis, our Australian Agricultural and Grazing Industry Survey, what we call the AAGES survey, and perhaps some of you here have participated in that in the past. Preliminary data from AAGES survey, which covers about 90% of the sheep in the broadacre sector, has shown that there's been considerable growth in the pastoral zone, the wheat sheep zone, and in the high rainfall zone over the past 2 years. 2 years ago, the rate of growth nationally was about 6%. Last year, it's estimated to be about 12%. And the area, the zone that is of the most significant is the wheat sheep zone, which represents about 56% of the national flock, and which last year had about 12% growth in the flock in that region. Now, an expected increase in merino sheep for wool production in that zone is expected to lead to a higher production of medium and strong wools, and that is wools between 19.6 and 24.5 microns. And what that means in terms of the components of the wool clip, as I've depicted here, where you have fine wools on the bottom, the medium and broader wools in the middle, and the coarser wools represented by the red bar. With a greater incidence of crossbred sheep to meet the demand for sheep meat, we're expecting that area of blue to expand, and you can see that by the orange circle that I've put up here. Now, of course, the micron distribution in the wool clip will also depend on seasonal conditions, because the above average seasonal conditions in many wool growing regions over the past 2 years has actually resulted in a slightly stronger wool profile than in the 2 years up to than in the years up to 2009-10. So producers' decisions, given the strong prices on both the meat side and the wool side, combined with Mother Nature, is what's going to be affecting that navy blue section in the graph. So that's just a profile of where the forecast increase in wool production is coming from. What I'm going to do now is just turn that around and to show you what those sorts of factors mean for ABARES' production forecast and price forecast.